I'm worried about that in the sense that I want the big booms and busts because I know how to play that. You can make so much money on options playing that, or so much money leverage. The sideways stuff, I don't have a lot of experience on. Where are you on your recession meter right now? Are you okay? We're probably going to have a recession by the end of this year, next year, or you're like, I'm not really seeing anything that's telling me that yet.
Not yet. As always, I'm always looking for the stock market to kind of send that signal. And it's so bullish at the moment that I want to see how both the NASDAQ and the S&P 500 respond to the 200-day moving averages. After that, if we start to post a close below that and we start to see a bigger pullback overall from the market, I would be concerned that that's an early sign of a clear recessionary signal from there. But I guess we just have to pay attention to the inflationary numbers from here, unemployment, and of course the month-over-month GDP changes.
Right. Just a couple of things before we round out that segment here. Along with the GDP contraction, sentiment is low, and IMF, I think, just on the 28th of April, they issued another warning of heightened recession risks, and they're talking worldwide, like a global recession because of the trade wars. And then, what was it? China lifted some of the restrictions, and then on tariffs, and then Trump rolled over on a bunch of different ones. It's and then he put some back on. We're in this period nobody knows what to do for it. You're listening to what people are doing for. Wasn't it? John was just talking to us about this week, where he's he had a friend who, they don't know what to do with the employees in the company. They lost a contract because they don't know what's going on with the trade war. So a bunch of businesses are okay, well, we're just going to sit and wait and see.
Wait and see. Yep.
This is not so good.
And that's honestly a product of uncertainty quite a bit, where people don't know where things are going to go. Sometimes they sit on their hands, and that can lead to unintended outcomes as well, and second order effects that we couldn't have anticipated.
Yeah. There's this thing where people who are not exposed to markets and who've not started any businesses, a bunch of them really think of businesses as an entitlement. I'm supposed to have this job. No. That person who runs that business is burning through capital and hoping to, expecting to earn a profit. If that ever stops, why should he or she have to burn through their reserves just to keep you around? They might do that for a little while because onboarding new people afterwards is difficult. But at a certain point, they go, look, I got to close up shop. It's not worth it anymore for me to make these widgets. Let me keep the money that I made over the last 10 years. And I'm so sorry, but you're going to have to go find another job. People, just regular civilians who don't know anything about markets, they don't necessarily understand that angle. I want to play this one thing. It's sort of like a preview for this interview with Cross Border Capital, Michael Howe, who's OG liquidity when it comes to tracking liquidity. He worked for I think Salmon Brothers back in the day, so he's been around. And I thought this clip was pretty interesting, or this promo.
Do you see the capital war between China and the US at the moment?
Trade wars are a distraction war. The real battle is the supremacy of capital. American capital wants to dominate, but then so does Chinese capital. And that war is being fought out in currency and financial markets. Trump may well win the trade war, who knows? But it looks as if they're not winning the capital war, given the problems that the bond market in America is signaling. Now, I think we're in a new era now. The Chinese are focused on devaluing the paper yuan against gold because that helps them to devalue their debts against real assets. Those refinancing tensions tend to lead to global financial crises that have been triggered by excessive debt relative to liquidity. That is worrying because it's saying that the system is beginning to break down in terms of its ability to roll debt, and therefore a lot nearer a financial crisis than many people think.
Anyways, that's totally worth it. I'm definitely going to watch from me. I love Michael Howe.